You wait for the perfect confirmation. You see the resistance break, enter the long position, and immediately watch the market reverse to liquidate your account. That exact pattern is playing out right now. The current Bitcoin pump is flashing hidden warning signs of a manufactured trap. Market makers are actively dragging the price into a specific kill zone in the upper $78,000 range. Welcome back to Crypto Whale Radar. Surviving this market requires ignoring retail patterns painted on the surface and decoding the institutional order flow underneath. On the surface, the data looks bullish. Bitcoin just broke a short-term trend line and successfully absorbed a wave of recent exchange inflows. But the internal structure of this rally is completely hollowing out in the advanced metrics. This split-screen chart visualizes the underlying market mechanics. The top half shows Bitcoin's price trending upward. The bottom half tracks cumulative volume delta, a metric measuring actual buying versus selling pressure. Notice the stark divergence. Price is rising, yet the CVD is explicitly printing lower lows, exposing heavy, hidden selling pressure. Now look at the open interest across derivative exchanges. It is dropping rapidly during this exact same upward price swing. Mechanically, a rising price combined with falling open interest means this pump lacks new buyers. It is fueled entirely by retail short sellers being forced to close their positions. This entire bullish breakout is a manufactured liquidity sweep. It completely lacks the spot buying fuel required to sustain a macro run. This dark mode liquidity heat map isolates exactly where market makers drag the price. Notice the aggressive cluster resting precisely at $78,500. Exactly $30 million in leveraged short liquidations sit there. The highest probability here is a violent sweep, a sudden wick piercing $78,500 to grab liquidity. Once orders trigger and liquidity is secured, market makers violently reject the price downward, trapping late buyers. That $78,500 mark is a magnetic kill zone, perfectly engineered to transfer wealth from retail traders directly to institutions. To understand the ceiling on this move, we have to pull back from Bitcoin's microdata and observe the broader macroeconomic chessboard. Right now, a $1 trillion corporate stock buyback window is opening within the S&P 500. These trillions in buybacks act as a heavy safety net, artificially preventing a total macroeconomic stock market crash in the immediate short term. Contrast that equity safety net with the ultimate risk-off asset, physical gold. Gold has outperformed Bitcoin by a staggering 60% since late 2021. The sustained dominance of gold proves that global capital remains in a defensive, risk-off posture. That structural reality prevents Bitcoin from maintaining continuous blue sky breakouts right now. If you want to stop getting trapped by retail fakeouts, subscribe to Crypto Whale Radar right now. Subscribing means joining an uncompromising circle of traders who rely strictly on institutional data rather than emotion. With Bitcoin preparing to sweep liquidity, we have to question how the altcoin market is going to handle these macro conditions. This three-panel chart highlights the synchronous failure across major altcoins, starting with Ethereum's absolute inability to break its $2,400 resistance level. We see simultaneous failures across the board. Solana is perfectly rejecting at $86, and XRP is failing exactly at $1.45. These synchronized altcoin rejections directly correlate with the S&P 500 entering a localized cool-off phase. The math is clear. If Bitcoin is merely sweeping liquidity while traditional equities cool off, the altcoin market is paralyzed and highly vulnerable. Knowing this $78,500 trap is coming is worthless if you lack the right platform to execute the short. Bingax is my exclusive professional-grade exchange choice for trading these high-volatility sweeps. You need unmatched reliability and execution speed so you don't experience slippage during the violent rejection off $78,500. Click the specific registration link in the description below. It unlocks massive deposit bonuses and gives you access to direct one-on-one trading communication with me. Elite market intelligence combined with subpar exchange infrastructure equals zero profit. Upgrade your execution stack. This UI maps the exact entry. Wait for Bitcoin to pierce $78,500, entering short only after confirming a 1-hour market structure break. Place your protective stop loss directly above the liquidity sweep wick. Finally, aim your primary take-profit target at the $73,000 support floor. The golden rule of this session: Never go long directly into a glowing liquidation cluster. Always wait for the rejection. Keep in mind, if traditional markets pull back, altcoins will bleed heavily, regardless of what Bitcoin does during its short squeeze. Having the perfect $78,500 setup is useless without perfect position sizing. Click the video on your screen to learn the exact risk management formula required to survive.